Hi, everyone. I'm Cynthia Nina-Soto.
And I'm Gonzalez.
Together, we make up Real Chats. And so today we're going to be talking about capital gains, right? And how that affects your home. So it's important to understand, Genesis, that everybody thinks that, or everybody knows, I should say, that taxes is something that the government is always going to come for. Especially when you're trying to make a profit or when you've made a profit on the sale of your home.
Oh, the government does.
Oh, the government loves taxes. So we're going to talk today about ways to reduce.
Or reduce, yeah.
I don't say the word avoid. The IRS is going to be listening to this.
Avoid.
Listen, it was her, okay? But well, of course, avoid, or let's just say defer those taxes for a later period of time. Of course, Genesis, what are the two major exclusions for capital gains?
Before we go there, Cynthia, why don't you explain to the person watching here what is capital gain?
Is the government coming for you? That's what it is.
No, it's not.
So capital gains, all it is the government's ability to tax you on the profit that you are making upon the sale of your home, right? And now you pay capital gains not only in the sale of your home, but when you're selling stocks, other investment properties. The government's always going to come for their share of the pie, and they do that through taxation, right? And so our job today is to kind of explain to you how to help defer that for a later period of time, or avoid them entirely.
Yes. So something that I love about real estate is, for example, if you're a single person who is selling your home, you may be able to deduct the first $250K of your capital gain. So if your home, let's say that you bought it for $250 and is now worth $500K. Well, that's a lot of money that you have in profit there, right? So by having this option of avoiding the first $250 in capital gains is a blessing.
Yes.
And then if you are a married couple, it's even better, Cynthia.
Why is it better?
Oh, it's $500K. You can avoid up to $500K in capital gains, which I think it is absolutely delicious.
Now, it's important to understand that you have to be a married filing jointly, okay? You can't be married filing separate in order to take that benefit. And so the way that that breaks down is that the first $250,000 or the first $500,000 in gain is tax-free, literally tax-free. You get a break. Okay. Now, there are times, of course, Genesis, especially in the environment that we're in today, where property values have gone up substantially. And so we have clients that their profit exceeds that threshold, that allowable threshold. Now, don't panic. There are still ways in which we can help you to reduce that tax basis, right? The very first option is you want to make sure that you are keeping track of all of the improvements that you've done to the property. Yes, the improvements, the ones that help to increase the value of your home are also going to be the ones that are going to help save you a ton of money at the end. You want to keep those receipts, and of course, the CPA is going to want to verify that you actually put that new roof in, or you need the new windows, or whatever that repair was.
If you have the ability, please keep your receipt on digital.
Yes.
Because if you put it on paper, over time, you are not even able to read what the receipt says. So if you just scan it, if you have an iPhone, we are not being promoted by iPhone, but if you have an iPhone, you can actually scan the document. If not, just take a picture, put it in a Google Drive, and just have it there.
Your CPA will love you for that. So that receipt's going to help to to increase your basis, right? The base at which the government starts counting how much of that $250 plus they're going to charge you in taxes, right? When does that kick in? So in your example, Genesis, you said, if you bought your house for $250,000, let's say that, over the past 5 years that you've been living in the property, you've invested another $50,000 into the property, and it's all documented. Well, now your basis is not $250. Your basis is now $300, right? And so every time that you're doing improvements, you're increasing that basis and pushing further along that first 250 or that first 500. Okay. Now, I forgot to mention earlier, Genesis, that when we're talking about capital gains, in order for you to avoid the capital gains taxes or take benefit of this 250 or 500 threshold, you have to have been living in the property as your primary residence for 2 out of the last 5 years. And so investment properties, sometimes people think, are not included in this. There's other tax strategies specifically for investors, such as a 1031 exchange, right? Where it allows you to defer the taxes for a future date when you are exchanging one property for another like property. Okay.
Which is just a different type of ways, especially for investors, to try to delay to pay capital gains as much as possible.
We all want to delay paying Uncle Sam because the reality is that we pay a lot of taxes.
Something really important also, Cynthia, going back to what you were saying about the expenses, which again is crucial, the way that you do the math when trying to see if you need to pay capital gains, is that, for example, the investment that you do when you're selling the home, what you pay to your realtor, the advertisement, everything also can be included in there. Like you can deduct all that money that you spend during the sale of your home as well.
It's just like in a regular business transaction, right? So the cost of sale becomes a deductible expense as well. So it's important to keep that in mind and make sure that we're keeping receipts of absolutely everything and providing your CPA or your accountant with as much information as possible to change that tax basis and reduce that tax exposure that you may have.
So now you know how you can avoid paying capital gain when you are selling your home, which, let me tell you, I love this because, for example, if you gain the same amount of money in stocks, for example, you need to pay taxes.
Absolutely.
On it.
Absolutely. You sell a car, you sell anything. Even for flippers, for example, even though they're dealing in real estate, because they're holding the property for such a short period of time, they're subject to capital gain taxes.
Even if you are a W-2 employee,
yes.
you need to pay
yes.
the taxes at the end of the year.
It's incredible. So it's like they tax us on absolutely everything.
Yeah. So I love the fact that you are able to do that with real estate. In fact, Cynthia, I know people, and again, I'm not saying you do this because everyone is different, but I know people that they live in a home for 2 years and then they sell it, they buy a bigger house and they live in the home for 2 years and they sell it, and they are just acquiring money and they don't have to pay that capital gain, that profit.
It takes strategy, right? So if you think that you're going to be selling your home and you're worrying about whether or not you're going to be exposed to capital gain taxes, you're going to want to contact your realtor quickly and, of course, your tax preparer, accountant, or CPA. You want to have a strategy in place before you go to market, so that way it could be as smooth and effortless transaction as possible. And, of course, avoid any pitfalls or dangers that you may encounter along the way. So we want to prep as much as we can ahead of time and make sure that we have your entire team on the same page, making sure that we know exactly how we're going to best serve you and save you the most amount of money while still putting the most amount of money in your pockets, right? Like, why isn't that a win, right?
So now you know. If you want to learn a little bit more about capital gains, how to take advantage of real estate, feel free to give us a call. Or
even if you're exposed to it, like just to understand, just give us a call, right? You can give us a call. Numbers on the screen. It's 978. Is it 928-928-6071?
We don't know our own phone number.
Don't know our own phone number. It's 928-6071. Of course, you can always leave us a comment down below. We live in the comments, so any questions that you have, we'll be more than happy to engage with you there. If you want to take it offline, we can do that as well. So it was a pleasure to chat with you again. We'll see you next time. Bye.